Ever seen those movie scenes with stacks of cash being moved around in secret, stuffed into briefcases, or loaded onto private jets? It looks dramatic, but the real story of where that money goes is even more fascinating. We're talking about money laundering, a global industry worth trillions of dollars every single year. That's right, trillions. It's a shadow economy that rivals the GDP of some of the world's largest countries. But what exactly is it? Simply put, money laundering is the process of making dirty money cash generated from criminal activities like drug trafficking, corruption, or fraud look clean, as if it came from a legitimate source. This isn't just about rinsing cash in a laundromat, though that's where the term famously originated with Al Capone. Today, it's a highly sophisticated process that financial criminals have perfected. To really understand how they pull it off, we need to break it down into the 3 core stages that every money launderer, from a small-time operator to a global kingpin, must follow: placement, layering, and integration. It's a journey from a bag full of cash to a shiny new yacht, and we're going to follow the money every step of the way. Let's start with stage 1, placement. This is the riskiest step for any criminal. They have a mountain of physical cash, and they need to get it into the financial system without raising any red flags. Imagine a character we'll call the Mule. Their job is to take large sums of illicit cash and deposit it somewhere. But you can't just walk into a bank with a duffel bag stuffed with $1 million. Banks are required by law to report any cash transaction over a certain threshold, typically around $10,000 in the US. So, how do they get around this? One classic method is called structuring or smurfing, instead of one large deposit. The Mule breaks the cash down into many smaller amounts, just under that reporting limit. They then visit multiple banks or even multiple branches of the same bank on different days, making a series of deposits that, individually, seem perfectly normal. 10,000 here, 9,000 there. It all adds up. Another popular placement strategy involves using cash-intensive businesses as a front. Think about businesses where customers frequently pay in cash: car washes, nail salons, restaurants, or vending machine companies. The criminal organization might own or control one of these businesses. They simply mix their dirty money in with the legitimate daily earnings. If a car wash genuinely makes $5,000 in a day, the launderer can add another $10,000 in dirty cash and on the books. It just looks like they had a really good day for business. The bank statement shows $15,000 in revenue, and no one is the wiser. The dirty cash has now been successfully placed into the legitimate financial world. It's no longer under a mattress. It's a number in a bank account. Once the money is in the bank, we move to the second and most complex stage: layering. The goal here is to create as much distance and confusion as possible between the money and its criminal origin. This is where the real financial wizardry happens. The launderers create a tangled, almost impenetrable web of transactions designed to throw investigators off the scent. Think of it like creating a maze with no exit. The money will be wired through dozens of different accounts in various countries. A key tool in this stage is the shell corporation. These are companies that exist only on paper. They have a name, a registration, and a bank account, but they don't produce any goods or services. They're just empty vessels for moving money. A launderer might set up a chain of these shells in different jurisdictions, especially in offshore financial centers or tax havens, known for their strict bank secrecy laws and lax regulations. The money hops from one shell company to the next. A wire transfer might go from a company in Delaware to one in the Cayman Islands, then get converted into a different currency and sent to a shell in Panama, which then invests it in another shell company in Cyprus. Each transaction is a new layer. They might use fake invoices to make these transfers look like legitimate business payments. For example, Shell Company A in one country will buy non-existent consulting services from Shell Company B in another, justifying the transfer of $1 million. This process can involve hundreds of transactions, crossing multiple borders and currencies. They might mix the funds with legitimate money from other businesses, purchase and then quickly sell high-value assets like stocks or bonds, or even convert the money into cryptocurrencies to add another layer of anonymity. The goal is to make the money trail so convoluted, so long and messy, that tracing it back to its original source becomes a nightmare for any forensic accountant or law enforcement agent. After enough layering, the money's origins are thoroughly obscured. It's been through the wash cycle so many times that it appears completely clean. And that brings us to the final stage, integration. This is the fun part for the criminals. The money now successfully laundered is ready to be brought back into the legitimate economy for them to enjoy. It re-enters the financial system looking like it came from a perfectly legal source. The final spin cycle. The launderer, who we can now call the mastermind, can finally spend their profits without fear of the assets being traced back to their crimes. How do they do this? The methods are as varied as their tastes. One of the most common ways is through real estate. The mastermind might use a shell corporation, now flush with clean cash, to purchase luxury properties: a penthouse in London, a villa in the south of France, or a commercial building in New York. The property can be lived in, rented out for a legitimate income stream, or sold later for a clean profit. They also purchase other high-value assets. They might buy a fleet of luxury cars, a private jet, or a super yacht. They could acquire fine art from a prestigious auction house, or invest in rare diamonds. These assets not only serve as status symbols, but also as stores of value that can be sold later. Another powerful integration technique is investing in or starting legitimate businesses. The mastermind could buy a hotel, a software company, or a restaurant chain. These businesses then generate legitimate profits, providing a continuous flow of clean income and a respectable cover for the criminal's wealth. The crime money has been fully integrated. It's now indistinguishable from any other dollar, euro, or yen earned through hard, honest work. The cycle is complete. But this isn't a victimless crime, and the story doesn't end there. The fight against money laundering is a massive, ongoing battle fought by dedicated professionals around the world. It's a high-stakes game of cat and mouse. On one side, you have the launderers constantly inventing new, more complex schemes. On the other, you have the global financial system's defenders. Banks play a crucial role as the first line of defense. They employ huge teams of compliance officers and sophisticated software that monitors millions of transactions every day, looking for suspicious patterns. That smurfing activity we talked about? Algorithms are designed to flag that kind of behavior. A sudden, unexplained wire transfer to a high-risk country. That gets flagged too. When a bank files a Suspicious Activity Report, or SAR, it goes to government agencies. In the United States, this agency is FinCEN, the Financial Crimes Enforcement Network. FinCEN acts as a central hub, collecting and analyzing these reports to identify potential money laundering operations. They then work with law enforcement agencies like the FBI, D, and IRS, who take on the painstaking work of investigation. These agents become financial detectives, piecing together clues from bank records, corporate filings, and informants to untangle the complex layers that criminals have created. International cooperation is also key. Organizations like the Financial Action Task Force, or FATF, set global standards for combating money laundering and encourage countries to work together to share information and track illicit funds across borders. So, to recap this entire dark process, it starts with placement, getting the dirty cash into the system. Then comes layering, where the money is bounced around the globe through a web of transactions to hide its source. And finally, integration, where the now clean money is brought back into the economy to be spent on luxury goods and businesses. It's easy to see this as a distant, white-collar crime that only affects the super-rich or the criminal underworld. But the impact is devastating and widespread. Money laundering is the engine of organized crime. It enables drug cartels, human traffickers, terrorists, and corrupt officials to profit from their activities and fund future operations. It distorts economies by flooding markets with dirty money, putting legitimate businesses at a disadvantage because they can't compete with fronts that don't need to make a real profit. It erodes trust in our financial institutions and undermines the rule of law. Ultimately, it fuels a cycle of crime and corruption that harms societies all over the world. Understanding how it works is the first step in understanding how to fight it. Thanks so much for watching. If you found this breakdown interesting, don't forget to hit that like button and subscribe for more deep dives into the hidden workings of our world. See you in the next video.